Hello everyone and welcome to Day Trader S&P 500. Today is Wednesday, October 20, 2021. This is Dale Woodson, editor of Woodson Wave Report. We want to get right into our Fibonacci time spirals here. Let's get into, here it is right here. The one that stands out from the March 4 low, as you know, I've been doing time spirals since before Woodson Wave Report in 1996. Always started them from highs, looking for a low. This one, for some reason, I started from the March 4 low, and it has incredible accuracy within 1 minute of slippage, no slippage on the others, and it's pointing to October 23rd, which is a Saturday. So we expect the market to make a turn on the next closest day it can, which trading day, Friday the 22nd or Monday the 25th. Most likely Friday the 22nd, as that is the closest to Saturday. And at this point, it looks like that will be a turning point high. Got a high confidence level in this Fibonacci spiral because it has a high rate of accuracy. Okay, we'll see what that brings, which brings us to the next turn date in the sequence, and this is from the on the S&P from the September 2nd all-time high. You can see there we're looking at the 55 days possible panic spike low. Doesn't look likely at this time. What is most likely is that the S&P makes a new high on the 22nd. When it does, this day of 1027 is no longer 55 days from the all-time high, so it's basically negated. There's a scenario where the S&P makes a new high by the 22nd, but a lower high, which would keep this turn date on the table for a possible panic spike low, but I would give that a very low probability at this point. Okay, but we'll see if that makes a lower high by Friday or a new all-time high, I think, like the Dow did today. And then the other one is the 11/1 turn date. That's basically the same as the S&P, except it's the NASDAQ. Same situation there. That comes off the table with a new all-time high because 55 days would no longer be from the all-time high if the all-time high changes. Okay, let's get into our let me get into our S&P here with our different dates. By the way, on the Fibonacci time spiral, let me go back one more time. I want to get to that 34-day, and we had mentioned this several times going all the way back. But when these things break, it's usually with the 34. And that's not the one I wanted. I wanted the other one from the all-time high. There we go. It's the 34. If it breaks, that's when it breaks. And the first sign, well, strike one, if you will, was when that 10.6 didn't mark a high. It was at 10.7, and it broke above that high. That was strike one. Strike two was when the 786 retracement just the other day did not hold. Strike three will come when it goes above 45.45 all-time high. Hasn't done so yet. Looks inevitable. That's what we're looking at. So the 34-day was the key. As usual, like I said, when they break down, that's usually where they break, and that's where this one broke. We can get into that with the chart there, if we will. And there is that right there, that spike up. That was 10.7. That was okay as long as that held, but as soon as it broke above it here late last week, that was the strike one. And then the strike two, if I can, I'll give you the Fibonacci retracement. This will be pretty darn close. I remember it was 44.80. I think it was 86 or 84. It was a direct hit when it hit it. It's right there. 88, that's what it was. But then it gapped above it the next day, and we got a gap up here on the 14th, a gap up here on the 15th, a gap up here on the 19th, and a gap up here on the 20th. All those are open, and yeah, they're doing the best they can to shake out all the bears. So that's where we're at. But this is what we're looking at. Again, that was strike one when it went above there, right here. Strike two was when it gapped up there above the 786. Strike three will be when it goes above the all-time high at 45.45. That will be for the 55-day spiral on October 27th. An unlikely scenario is by Friday, this makes a high here, but stays below 45.45 and keeps the 55-day spiral date low of October 27th in play or on the table. I give that a low probability. Okay, this is hourly chart of the S&P. What we're looking at. What else do we want to show you guys here? Let's just look at some other ones. Here is that. Oh, I wanted to show you guys the bull count. I can do that here. I still have it in purple. Yeah. So the bull count is the end of the decline right here at the 10-4 low. This is 1 up. This is 2 down. This is 1 of 3, 2 of 3, 3 of 3 up here. And I'm going to get some Fibonacci's on that. So let's get rid of this retracement there. Okay. Let's do internally on wave 3 with the parentheses. I don't want to get too technical for you guys, but we'll get an extension in here. Okay, and there is 1, and there is 2, and you can see 3 of 3 equals 1,618 at 45.55. I think on my chart the other day I had 45.56. That would be the 3 of 3 target, a 1.618 multiple, and that would be above the 45.45 high. Okay, so that will get validation as soon as the 45.45 all-time high is taken out to the upside. We can look at this first wave here, a larger degree of trend in parentheses, if you will. Let's get it down there, and that's pretty close there, and we'll get this 2 down here and see where 3 there we are right there for 3, but I still count this as a 1, 2, and then 3, and then 4, and 5. So we should get a near-term pullback on 4 for you bears. Okay, well, let me get that back here, and I'll get this internal wave 1. Okay, and we'll get it here. Okay, if that hits, let's just say it hits 45.56, that is the target for this 3. Okay, so we can get a pullback right in here, even in a bull count. Okay, and we'll run up to 45.56, my apologies, right there. And the 382 is at 44.70, the 50% is at 44.43, and the 618 is 44.16. The bears have a long way to go. Need to see this high taken out because that 4 cannot go below that 1. Let me show you here that 4. There's the 382. There's the 50%. If it goes down below the wave 1 high, which is, where is that at? I think it's 44.28.99. Is that it? 44.29. Yeah, I remember that. 44.29. That's what the bears would need to see, a break of that, and see these gaps get covered in this one down here, or get filled. My apologies. Okay, so that's the bull count. That's what we're looking at. There's the make or break, the third strike, if you will, for that 45.45 for that 10/27 date. The 10/22 date is still on, and that's the one that's got almost 100% accuracy. Really expect that to mark a high at this point. Let's get into these other indexes. Let's look at the SPY. Okay, and I wanted to look at that on an hourly chart. Let me do that. Let me go over here, see what we got here. We'll look at the SPY. Okay, and that. Well, maybe I did want to go to daily. Let's go to a daily. This probably looks a little better. There's the all-time high in the SPY, and you can see it hasn't reached it yet. This is very similar position as the S&P. Okay, so there's no difference there. The Dow, I believe, made a new all-time high. You can see that 1.217. There is the high in the Dow, so the Dow is off in the bullish count. Let's look at the NASDAQ. And the NASDAQ, you can see the NASDAQ's hanging around the 786, okay? So we got 5 down, and we've got that ABC up. NASDAQ has a way to go to get to the bullish count. It's got to go over the all-time high at 15,403. It's hanging right on that 786. And let's see, what else? The Qs. Let's look at the Qs. Qs the same way. I even still have that up there. That's hanging around the 786. If it does make a high right there in a second, or B wave, if you will, C is equal to A at 343.80 and 1.618 at 323.48, and the bullish count wants to see a break it at 382.78 all-time high on September 7th. I can go back and do the same for the NASDAQ. That high, all-time high, is on the 7th again at 15,403. And here's that ABC hanging around the 786. If that holds, let's see what we get for a retracement or an extension there. My apologies. We have an A down and we have a B up. There's the B. C is equal to A at 13,946 and a 1.618 at 13,183. Again, we're on strike 1, strike 2, and strike 3. That's where the NASDAQ, it's just 4 days after the S&P. The S&P topped right before Labor Day, and the NASDAQ topped right after Labor Day. I did the Qs. The Russell, let's look at the Russell, and that's still an amazing thing. The Russell, you can see the all-time high. I think it was back in, here it is, back here, back in March. Okay, and it's hanging around the 786 from this low here. It's still, like I said, there's markets that can retrace 99%, less than 100%. It's possible. It's not often. It's not probable, but it can happen if the S&P goes higher and makes a lower high than 45.45. The Russell, you can see, what do we have? An all-time high back in March, and here we are in October. That's seven months, almost 8 months later, and it still hasn't broken the all-time high. Not saying that it won't, but that's a long time to go sideways. It makes it look like a long sideways 4, and once it goes to new all-time highs, it will be, but until then, it's a series of A's and B's and C's. Okay, I hope that makes sense for you guys. Let's go back, and I think I can still show you guys. This is a few days old, but this shows the bull count there that we've had a 1, a 2, and then a 1, 2, 3, 45, 56. That's what we're looking for, and that'll wipe out the primary count and the alternate count, or the bearish wave count in the S&P. So we'll go back here. We'll go back to the S&P, and that's what we're looking at there from the all-time high. So we'll see if that one more peek over here at the turn dates. There we go. That's from the all-time high. That's the 34-day where it appears to have broken down. It didn't hold the 10.7 high, didn't hold the 786. It needs to hold the 45.45 all-time high. But the other one we want to show you is the one from the March 4 low. There it is right there. This one, accurate. If this marks a turning point high, it cannot do it on a Saturday, on Friday, or Monday. Then we'll look at the next turn date after that. Okay, thank you, everyone. And until next time, take care, everyone.